All right, welcome everyone to another beautiful simulation here that we're about to do. So we're going to simulate gold, and I welcome everyone who's new. You're not celebrating your birthday? No, I didn't. I had a cake, and that's about it. It's a waste of time. So we have a lot of people new over here. Welcome to the simulation, your first live simulation. So first of all, we're going to choose a random date over here. Random date generator. Perfect. Calendar date generator. Let's take a look at this over here. So we're looking at about, let's say, 15 dates. We want to start from, let's do 2023, I think, right? 2023, or maybe we could go to like 2022 November. November till where we are right now. So I guess guys are trying to zoom in, zoom out. Let's disable their annotations. Perfect. Bless me. All right, May, from November 2022 till, I think we got the 20th May 2023. We only want to do Sundays because that's when the market is open. All right, let's get dates over here. Perfect. We got November, December, January, February, March, April, May. Let's do 26th February. Looks good? 26th February, 26th February. All right, we're going to stick with 26th February. New simulation, 26th February 2023. Oh, pound yen. All right, gold. February 26th. We have, so we're going to start with about, let's say, 20 grand, 20,000. We're going to look at New York close. For all the new people, pay attention. That all questions. Yes, sir, listen. There is not a lot of chart. Okay. So guys, listen, this is going to be very, very important, right? When I do simulations in a Zen state of mind, which means that we don't want any interruptions, any questions. If you have a question, just control that question in you for about 5 minutes, and that question is going to be answered. If you can't control that question in you for 5 minutes, go ahead, ask it. But if I see that a question is asked that I'm getting to the answer, you're going to be removed from the webinar. That's how it's going to work. That's not a lot of charts. Ray, please keep the comments to yourself as well. This is a lot of charts. Don't worry about it. We've been doing simulations for about 5 years. It's more, yeah, so we're going to continue on right here. So we're going to keep the spreads, fixed spreads. We're going to keep them around, 15 pips. You're going to see around 250 days back in the charts. So we got 20,000, gold, 26th February, this, and start simulation. Perfect. So first we're going to load up the charts in the platform. From the daily, we're going to go to the 4 hour, and then we're going to go towards the 1 hour right here, 1 hour, and then we're going to go to the 30 minute, and maybe the 15 minute. I'm not going to put a lot of stress on the 15 minute, but it's just going to be good to have there for like extra confirmations, So I'm not going to put a whole lot of stress on 15 minutes. 15 minute, 30 minute, 1 hour, 4 hour, daily. There we go. Perfect. So now we got to change the template, right? Because this template is something that I don't trade with. So we're going to do black on white. We're going to switch to candles. We're going to zoom in a lot right here, and then we're going to save this template as, oh, what happened? Template, save, accidentally pressed enter. Naked template, right? That's done. Go to 4 hour, right click, template, naked template, 1 hour, right click, template, naked template, 30 minutes, same idea. There's another way that you can do it. You can save it as default. So when you open up your charts, it just defaults to, this naked template right here. Okay, perfect. Now, the daily candles are moving down. Perfect. 4 hour candles are also pushing to the downside. Perfect. Let's take a look on the 1 hour time frame. 1 hour candles are also pushing to the downside. Beautiful. So here's what we got to do. We got to go towards the time that we're going to realistically start to trade, So we're going to start with pre-London, and we're going to move on towards New York Open. So this time right here, this is 6 p.m. Eastern. Go towards the 1 hour. 7 p.m. Eastern, So this is 1 a.m. Eastern time. This is 2 hours before London Open. So now our analysis is going to begin right over here. 2 hours before London Open. Let me do scale fix over here really quickly. 30-minute time frame, also properties, scale fix, like this. Beautiful, perfect, right? Now we got to do some analysis on daily time frame. Looking at the daily, what we can see currently here is that we are coming down, but if we look to the left-hand side, there's a lot of consolidation to the left-hand side, right? Look to the left-hand side, a lot of consolidation. You see there's this candle right here, and this is their support. So if we measure 1802 till like where price is right now, this is like 60 pips away. So this means that price can potentially continue pushing down for 62 more pips. Now we got to take a look at the smaller time frames to see if that even makes sense, because we're trying to trade the trend, right? Looking at the 4-hour time frame, this is what we see here now in the 4-hour. 4-hour is trying to push down. Let's take a look on the commons, scale fix. Okay, perfect. So this is what the 4-hour is doing. 4-hour is, oh man, I need this rectangle over here. So the 4-hour is, oh, got to change this as well. So many changes we got to do. So many changes. The changes never end. This, like this, looks good, perfect. Okay, so now looking at the 4-hour time frame, we have, oh my God, got to change this as well. Okay, I guess this is the last change we need to do here now, right? Let's make this color, make this a little bit fatter, perfect. So if we break above this area, let's say we have 1815, there's a 100 pip range that price can continue to push up. If we can break below support, then we can continue pushing down. Let's take a look on the 1-hour time frame. Now looking at the 1-hour time frame, this is what we got. We got a support formed on a 1-hour time frame, and also we have some sort of a resistance forming on a 1-hour time frame, right? So we're basically forming a support and a resistance on a 1-hour time frame. So this means that there's a very high possibility that price can maybe continue to push up if we break above 1810, continue till 1813, 37 pips away, or if we break below support 1807, 1806, looking to the left-hand side, let's see over here, looking to the left-hand side, we got to figure out how much of a range do we have. So even if we do break below 1807, 1806, this is like a 26 pip away range, and then maybe you're looking at around, like 1797 for price to continue to push down. Maybe. So let's take a look on the 30-minute time frame here now. Now looking at the 30-minute time frame, now we have some more information, right? And what this information is telling us is that we're creating a support, and obviously we're creating a resistance. So all we got to do is wait for price to either break above, or we have to wait for price to break below. That's it. Because price is ranging, we're consolidating, so all we got to do is to wait for price to either move up, or we got to wait for price to move down. That's all what we're looking for at this point, right? All right, let's play this and see how it plays out. So let's copy this over as well onto the 15-minute time frame in case we need to look on the 15-minute, right? Just in case. And that's it. That's all what you got to do. Just got to wait. We have the time right here. Time is running. Time is pumping. And yeah, so we're just gonna be very stoic about the decision that we're gonna make when it comes towards price. And that's it. Right? Let's speed it up here a little bit more. Thank you guys. Oh, there we go. We're breaking above this area. Now, since we're breaking above this area, this is where you could say that, okay, you know what, maybe there could be some sort of an impulse entry, but let's just wait to see how the 15-minute candle closes. Because if the 15-minute candle can close somewhere over here, oh, never mind. The 15-minute candle closed with a huge rejection, right? So we don't know whether price is going to continue pushing up, or will it, continue to push down. We don't know that. So we're going to wait over here now. And as we can see, the time here is ticking really quickly. So whenever you're doing simulations, you have to take into account how fast the time moves, right? We got to keep that into account. Finally, the 30-minute candle has closed, and look how the 30-minute candle closed. We closed with a big rejection, candle closed back in the range. What are you going to do? What are you going to do? Nothing. There's no trade at this point. We're waiting. So slowly we're moving towards we are in pre-London, but we're also moving towards the London session, right? The London Open, where the news, not the news, where the volume comes in. So see how we had volume during Asian session, and then we moved into pre-London, volume died, right? So when's the next time there's going to be volume? If you guys are going through the database, you're going to know the next time there's going to be volume is going to be around London Open, right? So all we got to do now is just wait. So this 30-minute candle is about to close here as well in about 2 simulation minutes, 1, and there we go. Candle has closed bearish. What are you going to do at this point? Nothing. You're just waiting. Check news. Let's check news. There's no news. Perfect. Checked it. So we're just waiting over here now. Just waiting for some sign, for some signal, because now we're moving into time when there's volume, and you just got to wait. If we can wait, we're going to be successful. If we don't wait, we're not going to be successful. And if we don't wait, it's going to be an embarrassing stream because Raja didn't wait on the simulation stream and lost money, and we don't want to do that. Even though it's demo money, but we don't want to do that. Now, this is where you can anticipate a break up. I really want to take a buy over here, but yeah, right here, because we're breaking above this area, and then anticipate London Open to continue pushing price up, but it's going to be risky, right? Wow, look at that. Last 2 minutes. Last 2 minutes we're trying to pump. Oh, wow, look at that. Look where the candle closed at this point now. The candle closed above this area. What does this tell you? Right? The candle closed above this area. Also, it closed with no wick on the top. So whenever a candle closes with no wick on the top, this means there's a 50-50 probability that the price is going to continue pushing up. But there's a trick. And the trick is, how do you turn that 50-50 probability in your favor and then take the trade moving in this bullish direction? How? You want some liquidity, right? Ray, perfect. You want liquidity. Liquidity is a wick down and then price to move up. Let's take a look on the 15-minute timer. 15-minute candle also closed with no wick up. So we got to wait, right? We got to wait for some sort of a liquidity grab. Once that liquidity grab happens and price breaks its own high or whatever, then yeah. All right, so look at that, right? We're pushing down. Maybe we're creating that lower wick at this point. Are we? Maybe. Wow, look at that. See, now if it breaks its own high, this is a very good probability that price is going to continue pushing bullish. Yes, boss, this London Open is in about 15 minutes. And hold on, right there. See, so it made a lower low. So now the idea is that even if you take a buy at this point, let's say we go with like a 1% buy, we take a buy at this point. Oh, what's this? Visual mode. So even if you take a buy at this point, the stop is below this wick, because now you're anticipating, since it's made a lower wick, it should continue making a new high, and then it should continue pushing up. That's the idea at this point. So we're looking to see whether price is going to continue up to 1812, somewhere this area right here, because now we have volume coming in with possible London Open. Obviously, price can continue up to 1814, but always remember, whenever you're going to have a target at 1814 or whatever, all the way up over here next to a zone, it's not necessary that price will always come to that zone. It can maybe come a little way to that point or something like that, and then just reject, right? So we don't know that. So it looks like volume is pumping in at this point. We are 10 minutes left in this area. Oh, damn, look at that. Some nice volume came in over here. We have 5 minutes left till London Open. And I guess with London Open, we can continue to push price up. There we go. New candle has opened. Let's take a look on the 15-minute time frame. Usually, I let positions run during the London session, right? During the London session, there's a lot of volume and price is highly likely to continue in the direction where it breaks up. So in this case, as long as price does not, let's say, break below the 15-minute low, previous 15-minute low or whatever, it should continue pushing up till, so I guess what I'm going to do is, as it comes up to this point, probably going to secure positions and leave the rest. Oh, anyway. Well, yeah, like that actually went faster than I expected it to go. Let's take a look on the 1 hour time frame, see what the 1 hour candles look like. So the 1 hour candles, they look like, oh, nice. So 1 hour candle also broke up and we continue to push up. Perfect. This trade made perfect sense, right? This trade made perfect sense. There was nothing about this trade that would make no sense at all, right? So let's so we're breaking above this area. Awesome. Let's move up a few candles over here, see what's happening. Oh, hold on. Look at this. What does this tell you guys? What's going on over here? This is something really, this is only if you're experienced, you'll be able to spot this. What does this tell you? What's happening at this point? Fake out, okay. Fake out, okay. Okay. I'm looking for something else. Retest. Perfect. That's it. That's the retest right there. And this is something really important right now. Previously, we had a resistance right here and we had a support right here. Correct? We all agree with this? We had a resistance and we had a support. We all agree with this, right? Then price broke up, whatever, perfect. Now, the 30-minute, now take a look at this, right? If we're looking at the most recent price action, don't you agree that now the 30-minute has created a support right here? The recent price action, we've created a support right here, right? And we've basically now, the trend was down, we had to break below the support to go down. But what happened? Price broke above this area, made a new high, came down, created support. If we've created support, what's the probability that price can retest this high here again? 40 pips away. So that's a 40 pip range, means you can get easy like 20, 25 pips again, right? So what's going to be the idea? The idea is probably going to be a buy since we've created support. Stops are going to go below this 30-minute candle and looking at price to maybe come up to like 18, 11, whatever. That's it. Simple, right? So as long as this candle respects the low of the previous 30-minute candle, we should still continue to push up based on this super easy analysis we did. So all we want is the candles to continue making higher highs and higher lows on the 30-minute time frame. That's it. That's all what it's going to take. Simple price action. Oh, look at that. I didn't expect that to happen with one candle, but I guess it happened. Just waited for support to form, take a buy, price. Now I don't care where price goes after this, like price can go wherever, up, down, like who cares? Because we got what we wanted. Got a $20,000 account, took 2 trades, one price broke up and took a buy, and the other one was in New York session, right? Look, time. It was New York session, support form, take a buy, price move up, one candle, perfect. $570, on a $20,000 account. So let's move on towards the next session right here now. 7 p.m., 8, 9, 10, 11, 12, 1. 1 a.m. Eastern, right? This is again pre-London session. Looking at the daily is now, oh wow, look at that. Daily candle created a support right here. Daily candle created a support, bullish candle formed, support formed, so now there's a probability that the next daily candle can continue to move up. So now we got to take a look at the 4 hour and the 1 hour to see if that really makes sense over here as well. Let's take a look on the 4 hour time frame. All right, let's remove all analysis because we got to do fresh analysis now. Skip this. And looking at the 4 hour, it does seem like we're creating a resistance to possibly continue down towards 1808, but now we got to take a look at the smaller time frames to see if that even makes sense. Let's take a look at news over here as well. So we have no news over here. Perfect. Let's take a look on the 1 hour time frame. Looking at the 1 hour, we have some more information now. Remove this. Now on the 1 hour time frame, we had a support. We broke below support, and I guess we had another support over here that we broke below that support. Now the candles are forming bearish, so we don't know whether it's gonna, like continue pushing down or it's gonna do like a retest to continue pushing down. Because also understand there's a lot of consolidation to the left hand side. So this maybe is kind of like the same trade I took on Thursday, where if we can break above this resistance with volume, we can continue to move price up. Right, but now we're breaking below this consolidation, so the only reason why price is going to move bearish is going to be with a lot of volume, right? Let's take a look on the 30-minute time frame. Looking at the 30 minutes, we have some more information here now, and this information is telling us that we are basically maybe rejecting this area. So if we're rejecting this area, we came down, we broke below this support. If we're rejecting this area, maybe we can have price create some sort of a resistance, break a candle low, or maybe a resistance form, and then with volume probably go down, or if we can break above this area, then we can continue to go. Can't take a buy because this body is not strong enough, right? Because right here we had a strong body, right here we don't have a strong body. So we're just waiting. Also, we got to take a look at the range here as well, So we're just waiting for the candle to close. Even though we're breaking above this high, price can continue to push up, but we need some sort of candle basically to close bullish. Right, see that candle closed bullish. Let's measure this range. We got like a 23 pip range. So what do you guys think? Are you going to do like a buy, like 0.5% low risk? It's kind of like the same setup as we had right over here. Low risk buy, right? Nothing crazy. Low risk buy, because it's a simulation and we're learning. Yeah, no, but if we take a buy right here, it's like a 23 pip range. We can easily get like 10 pips out of it, 12 pips out of it. Stops are going to go below this area. It's kind of like the same idea we had right over here. Support form by, I guess this was a bigger range, but yeah, I guess. Stops go right down over here, and we're looking at price to, basically 1-to-1 risk reward. Minor resist, no one cares about this minor resistance because our range is this one. This is our range, right? And because if price broke below the support, there needs to be some sort of a retest for price. If price is going to continue pushing down, there needs to be some sort of a, some sort of a retest. So all we're doing is we're just focusing. Oh, okay. Yeah, so we're just focusing on one candle. Time is UTC. I have no idea what time zone this is. I've just memorized what hour is going to be what session. I've just memorized that. Okay, so there we go, right? Candle has closed bullish. We did some sort of a retest, and now we got to wait for some sort of, some sort of a resistance to form, and then we can continue to push down. Oh, look at that. We're breaking below this low, right? Can we take a sell? Stop is going to be pretty big based on the trades we took previously. So let's see how the 15-minute candle closes. Break of the 15-minute would be much better. Look at that. We're at the support. Oh, looks like, 15-minute candle has started over here. 15-minute candle closed with no wick at the bottom. So this is where I got to be, 15-minute candle closed with no wick at the bottom. So you got to be, I don't know. We just got to, not going to mess around with that because, it's a 50-50 chance. Oh, wow. Very strong move over here, price coming down. Looks like the retest would be even massive, right? So even though sometimes you miss these moves, don't be sad about missing these moves. because you can always get some sort of a retest, right? So if you look on the 1 hour, 1 hour broke below this area. Looking at the 30 minute is breaking and closing below the support, which means there's massive volume, and there's also, you know, we got London Open coming in here as well. Just take a look on the 4 hour. 4 hours also bearish, coming down. Looks like the daily candle is also coming down, even though you got support. Yeah, I don't do scalps, buddy. I don't do scalps. I do solid confirmation trades. That's all what I do. Solid confirmation trades, right? Now the 15-minute candle closed, you know, with a little bit of rejection. So we don't know how much the next candle is going to continue pushing bearish. I guess it's going to move further down, but I need some strong confirmation over here, even on the 15-minute. Let's take a look at this. Candle's about to close. There we go. Candle has closed bearish on the 15-minute. 30-minute candle is also closing. Yeah, I don't know. I don't have enough, strong enough confirmations, I don't think. But yeah, I don't think I have strong enough confirmations. But I do feel like this volume should continue driving price down. Let's go with the 0.25. Extremely low risk, right? Extremely low risk. Because sometimes I still want to be in a trade, but I don't want to go with my full risk, so I go with, like, you know, very low risk. Very low risk. So this is very low risk, 0.25%. Nothing like gigantic at all. You know, this candle's about to close. Wow, it is really coming down over here. Really strong movement over here. Look at 30-minute time frame. We're just coming in pretty strong. Yeah, maybe if there's a, you know, some sort of a rejection. Okay, the candle has closed. Let's just let's put stops at break even right here. Perfect, right? I mean, yeah, honestly needed to see some sort of a resistance to form. Okay, perfect. I want a bullish candle. Yeah, like a bullish candle would have been nice, but I don't think we got it because, yeah, oh wow, look at that. London Open is coming in strong. Wow, incredible. Yeah, it's a very strong move over here. 4-hour candle also broke below the low to move continue down. Daily candle is also coming out to break the low over here. 1-hour candles also, 30-minute. Yeah, there was no, I honestly didn't see any confirmations. Maybe now looking in hindsight. So this is a trade I also took maybe on Wednesday. Oh, wow. Wednesday or Tuesday, that we have a strong candle coming down, no wick. Okay, 50-50 chance, whatever. Wait for the next one. Next candle closes with a small body. And the one after that closes with a bigger body, which means the volume's coming back into the market. And this is exactly the kind of trade I took on Tuesday. So yeah, still learning over here, but yeah, it's good. It's good. 3 point. Even though this was a very big move here, 45 pips, but yeah, I'm not in it. You know, it's better to just stay out and just chill. You know, so this is staying out and chilling at this point. Patience. You got to be patient. Now look, the 30-minute candle has closed bullish. Can't really, no, okay, right here. 30-minute candle has closed with a big rejection. So yeah, just got to wait. Just waiting for the perfect opportunity. That's all what we're doing. No runner, no. It was like a 0.25 risk. It was a very small risk, 0.25. What's 0.25? Nothing. This was 0.25 right here. Made about $65, you know. So yeah, just waiting over here now for some sort of a, you know, like a resistance to form, for price to continue pushing down and whatnot. Yeah. So yeah, we broke below the support. We moved all the way down, made a new low. So maybe we're going to come up to create some sort of a resistance. Who knows? Let's speed it up here a little bit. 30-minute candle closed like this. Okay, let's see if we create some resistance. 15 minutes creating resistance, but we need a resistance to form on the 30-minute time frame, right? We're again breaking the low over here, kind of like how we broke the low at this point here as well. So again, we're breaking the low and we're trying to close. If we close bearish, I think there's a very good opportunity for price to continue pushing down. And there we go, candle has closed bearish. Looking at 15-minute, 15-minute candle is creating some sort of a minor support. 30-minute candle has closed bearish. So maybe wait for this minor support to be broken on the 15-minute rather than take. I mean, the sell looks pretty great on the 30-minute. Right here you can take a sell price and go down, but the 1 hour, 1 hour also closed a bearish candle over here. So 4 hour candle, yeah, I guess. So here's what we're gonna do, right? So we're gonna use dynamic risk. And dynamic risk, this is how dynamic risk is gonna go. Would you not enter at the break of the bullish candle, blah, blah. Come on, Jairo. If you have a question, keep it in your heart for 15 minutes. 5 minutes, keep it in your heart. Don't just type whatever comes, like just chill. Relax. Just relax. Just chill out. Everything's going to be talked about if it's important to talk about. So we're going to go with dynamic risk. And the only reason I'm going to go with dynamic risk is because of this, right? The 30-minute candle looks great. We formed resistance. Candle has no wick on the top. You know, so this means there's a very good possibility for the 30-minute candle to continue pushing down, right? Perfect. When we take a look on the 1 hour, the 1 hour also looks great. We had bearish candle. Now we have a bullish body, small body, and then we're forming some sort of a bigger bearish body than the previous one. So maybe the volume's coming down for price to continue pushing down. Perfect. Now, looking at the 15-minute, this is where things get a little bit tricky because the candles created a minor support on the 15-minute. So this may mean that we may need to wait for this low to be broken for price to continue pushing down. Now, sometimes price just continues pushing down without even doing anything, right? So for that reason, I'm going to use dynamic risk. So total risk we use normally is like 1%. So I'm going to go with, like 0.5%. And let's just execute a sell over here. It's going to be, stop is going to be up above the previous 30-minute candle and anticipating price to, continue down till this wick over here, right? And let's just wait for the 30-minute candle, right? Yeah, that's all we can do. Wait for the 30-minute candle. We're not going to manage risk at this point. Oh, hold on, buddy boy. We're not going to manage risk because we're already using lower risk. The 30-minute candle is about to close right here. Looking at the 15-minute. Now the 15-minute is also creating some sort of resistance. The 30-minute candle closed like a doji, which means it was a waste of time in that 30-minute candle. And if that was waste of time and 15-minute candle is creating resistance, looking at the 1 hour, we also, 1 hour has maybe created that top wick to continue pushing down. So I guess there's a very good possibility. Maybe we can add the rest of our risk over here as well. Maybe right over here. Anticipate it to continue pushing down, maybe. And then maybe we can bring our this first stop loss right over here as well. Yeah. Looking at the 30. Oh. Yeah. Let's take a look on 15. Oh, 15-minute broke the high over there. Okay. That's like got stopped up. But anyway, like the position still played out, And since we used a lower risk, we didn't lose a lot. We were at 3.6%. We lost like 0.6%. Didn't really lose a lot, And that's totally fine. So since that's done, let's move on to the next one. Oh, wow, look at that. Nothing really happened after that, right? But still would have been a pretty good 20 pip move over here. No problem. Let's move on towards the next pre-London. Oh, God damn. It's happening in gold. I don't even remember all this happening. 7, 8. Pre-London session. There we go. Daily has rejected that level. We're moving up. What's the trend? Very easy. The trend is bullish, right? Looking at the 4 hour, 4 hours moving bullish. We got support formed. Looking to the left-hand side, we have like an 80 pip range for price to move up. Let's see if that makes sense on the 1 hour time frame. Looking at the 1 hour time frame, we are creating a support. Beautiful. Support is being formed, and this just means price should continue pushing up. Let's take a look on the 30-minute time frame. Looking at the 30-minute, we are creating another support right here. And also at the same time, we are creating some sort of a resistance on the 30-minute time frame. So if we're creating some sort of a resistance on a 30-minute time frame, maybe we need to create some sort of a support, or we need to break above this high, and that break above the high would also be the break above on the 1 hour time frame for price to continue pushing up. That's all it's going to be like. But the 1 hour candle is creating support. 4 hour candle is creating bullish trend. The daily candle is also bullish coming up from here. So what's the probability that on the 1 hour we're going to continue pushing up? What's the probability? On the 1 hour we may continue pushing up. That's the only question you got to ask yourself. If you're looking at the higher time frames, you got to ask yourself, what's the probability that the higher confirmation trend will continue? And the answer is going to be, I guess there's a higher probability it's going to continue. But then, does that make sense on the lower time frame, the 30-minute time frame? No, because we're creating some sort of a resistance. Now, this is where you can decide one of two things, right? One of two things you decide at this point. Either you're going to enter with static risk, or you're going to enter with dynamic risk. You got to decide that first. I can't tell you which is going to work for you. That's something you have to decide. You have to plan on your risk at that point. Because if you use static risk, you have to wait for price to break above this resistance for it to continue pushing up. If you're going to use dynamic risk, then you can act on the higher time frame confirmation and then add the rest of the risk on your original confirmation if we do break above this high. Right? But if we break below the support, then obviously price will continue pushing down. We need to wait. So we're going to do dynamic risk, right? In dynamic risk, we can cover both things. And the beautiful thing about dynamic risk is going to be that if we take a buy here, stops are down over here, our total risk is 1%. Even if price comes down and stops us out, whatever, we're still going to be losing 0.5% instead of full 1%. So you always got to understand this. Our total risk is 1%, and we're willing not to lose that amount. I'm just going to keep it wherever, 4 hour. Okay, yeah, that makes sense over there. Okay, perfect. So we got dynamic risk in, and we're going to add the rest if we break above the high, but if price comes down, hits our stop loss, then we basically lose 0.5%. So the whole idea is taking a buy, uptrend, support formed on the 1 hour, and anticipating price to continue pushing up. Let's see what happens over here. Oh, look at that. Look at this smooth. We're breaking above the high at this point. If we're breaking above this high on the 30-minute, this is a perfect impulse entry. And we're not even, and this is like 13 minutes in. It's not 2 minutes in, it's 13 minutes in. So maybe over here we can add the rest of the risk. Now, when we're adding the rest of the risk, our stops are below the, whenever you're using impulse entries, your stops are below the current candle. Because if an impulse entry, the candle is breaking above the previous candle's high, you're not expecting it to break its own low. Okay, if it's breaking its own high, you're not expecting it to break its own low. That's the beautiful thing about impulse entries. The new 15-minute candle has started, and yeah, this 30-minute candle is about to close. Let's see where it closes. We're moving up. Candle closed with no wick. So let's take a look at the trades. So if the candle closed with no wick, there's a 50-50 probability price can continue pushing down or it can continue pushing up. So what are we going to do? Maybe manage our trade. That's all we can do, right? Manage our trade, because even if price comes down, we're still going to be in profits. Okay, we're not going to lose anything. The main idea is to conserve capital and to keep as much money in your pocket from the trades as possible. right? So we're coming up, coming down. You know, at this point, if it starts to move up during the London session, sure. If it starts to move down, sure. That's how it trade. Oh, wow, okay, perfect. So we continue to move up. Perfect. We're about like 5% into this at this point, and I think it's beautiful. Awesome. Right? So we explained dynamic risk and static risk. If you use the static risk, you had to wait for price to break above the high. If you use dynamic risk, you're using one confirmation to add risk, and then on your bigger confirmation, you're adding the rest of the risk. So it's just basically managing risk at this point. So now the analysis is simple. We're moving up, and all we gotta wait is for price to create, you know, some sort of a support. If we can create support, we can take another buy and have price move up. That's it. That's all what we want. For price to create support, take a buy, and then continue to push up. Let's see how this 30-minute candle closes here for London Open. Oh, wow, look at that. We closed like that, looking at the 15-minute time frame. 15-minute looks good for a buy, but the 30-minute candle closed like this. The stops on 30-minute candles are going to be very big, 40 pips. 1 hour also a big rejection. So maybe we'll have to wait for this high to be broken for price to continue pushing up, because the 15-minute is lower confirmation. It needs to break the high. I mean, if it breaks the high, then it's going to be, oh, look at that. It's breaking the low over there. No buys. You got to make your decisions very quick. No buys. It broke the low, no buys. That's it. We're just waiting for support to form. That's all we want to see. Maybe it may be formed during New York session. Who knows? But let's see how this candle closes. Close bearish. No buys, no sells. For sells, we need to form support and break support. This isn't a support. This is just rejection. I think this is going to be a cleaner support to break for price to move down. But the range is like 20 pips, whatever. So, yeah, let's just see how this 30-minute candle closes. Oh, 30-minute candle closed bullish, but with no wick on the top. 15-minute candle closed also with no wick on the top. 1 hour candle closed with no wick on the top. This is where these buys are going to get, I think, a little bit difficult. It's easy for me to see because I've seen these things happen a lot of times, because just look at the bodies of the candle. Yes, smaller bodies, Hyro, perfect. Smaller bodies. You got small body, big body means volume is in, small body and body gets smaller, right? So there's maybe the buys are going to be, well, I wouldn't recommend buys because the bodies are getting smaller. When the bodies get smaller, and even though I guess we're missing the trade over here, we missed the trade, that's totally fine. Because, you know, the bodies weren't closing the way we wanted them to close. So, oh wow, look at that. We're making a clean candle move coming straight down. Beautiful. Can this be a clean range? Oh wow, 65 pips. See, this is what I like about clean candles. Look at this clean candle. Because clean candles, like even if you look at, you know, right over here, if you look at right over here, clean candles are key. Look, these are clean candles. So if we break below the support, you got clean candles that price can move into. Okay, so even if, like, you know, let's say we create support, this is a clean candle that price can move into. So clean candles are key for your trades, right? So yeah, so I guess we're creating a resistance up over here now, right here, and yeah, just gotta wait. Let's just forward this by 30-minute candles, forward this another 30-minute candle. Okay, so 30-minute candle has formed. It's like a 29, 30 pip range for price to probably move up, because now we can move this support to right over here. Kind of like the same thing we did here, right? You guys remember? No. Or maybe way over there. It's the same thing we're doing. So initially our support was right here, price moved up. This wasn't a support because this was still within the range. But now in New York session, we're creating this support. We're creating a new support. Let's take a look on the 15-minute, because if we take a stop loss on the 30-minute, It's a 23, 24 pip stop. Let's take a look on the 15 minute. On the 15 minute, stop is going to be around, like 15, 16 pips. So I guess we can move up, but I'm not going to risk it because it's still within this range. So we're just going to let it pass and move on towards Thursday, to be honest. But still, even though if you're not going to execute on a trade, it's still better. Oh, hold on. Yeah. So it's still better to anticipate trades, right? Anticipating trades also builds your confidence, but anticipating trades in a way that, okay, next time if it happens, I'm going to get it, that's way better rather than saying, oh, I anticipated this trade, I missed it, I suck, this is this is so frustrating. That's not the way to go about it, right? The best way to go about it is like, okay, perfect. I saw this happened, it played out, we made a liquidity wick, didn't break the low, perfect. Next time if it happens, I'm going to execute on it. That's the mentality you should have. It's like when you're in school and there's a bully who bullies you all the time, you're like, okay, next time if he does this, I'm going to do that. And you don't do that, and oh wow. And if he does something again, and then a day comes where you do what you thought you're going to do, and you're like, oh wow, I never thought I was capable of this thing, or to protect myself or whatever. Anyway, side note. So again, we're at pre-London session here now, like clockwork, only trading the same sessions every day, right? Let's take a look on the daily time frame. Daily is approaching a rejection area. We may reject from this area, we may go up, we don't know. Let's take a look on the 4-hour time frame. Looking at the 4-hour, we're maybe creating a support, but the body is smaller. So if we break support, we have a nice range, 74 pip range. And if we create support on lower time frames, which we're going to take a look at, we may continue to fill the wick at 1843, 100 pips away. We don't know, right? Just certain big long-term ideas on the 4-hour time frame. Now this is where the meat and potatoes are, the smaller time frames. The 1-hour time frame, we're creating resistance, and the 1-hour time frame, we're creating support. Perfect. What better analysis can be other than this? We create support, create resistance, and that's about it, right? If we break above, we can continue pushing up, 34 pip range. If we break below, maybe somewhere, wherever, we may continue pushing down over here. Who knows? Let's take a look on the 30-minute time frame. Let's clone this over to the 30-minute. Objective, clone. Looking at the 30-minute, this is what we got on the 30-minute time frame. We're creating support. We can adjust this now. Yeah, this is getting tricky, to be honest. I don't necessarily like this. Yeah, I don't like this situation here at all. I mean, buys don't look good. Sells look good. Sells look good if we can maybe, break below this support. If we can break below the support, we can anticipate volume to continue pushing price down, and that's about it. Buys don't look good at all. I don't like buys. Very, very tough. Extremely tough for buys. All right. There we go. Look at that. We're breaking below the low. We're breaking below the low, but coffee got stuck. We're breaking below the low, and we also got this wick to the left-hand side. If we got this wick to the left-hand side, this means that at one point this candle was bearish, and then it rejected. So as this candle is open, we don't know whether this candle will close bearish or it's going to reject because its buddy right here rejected here as well. We don't know that, so we're going to wait. Well, I'm going to wait. Because I don't know whether it's going to reject or it's going to close. I just don't know. So we'll have to wait. Wow, look at that. Candle closed bearish. What are you going to do? Nothing. Still consolidated. We need a candle to close below that area. We need a candle to close below this support. Let me zoom in here a little bit. Yeah. We need to close below the support. Candle's about to close. We got pre-London volume here as well. And 3, 2, 1. There we go. Candle has closed bearish. This is perfect. Looking at the 15-minute time frame, 30-minute time frame. So I guess we could possibly take a sell over here for price to possibly continue pushing down, maybe to fill this wick. This is a 9 pip range. Yeah, I don't like this, you know, like even till here, this support. This is a 18 pip range. Yeah, this is a very, very tight range, guys. Even though we can come down to this point, but this is a very tight range. Very tight range. Extremely tight range. Like, what are you going to do? Nothing. Very tough. Very, very, very tight range. I'd rather stay out. Because we already made $1,000 on a $20,000 account. Wow, look at that. No news. There's no news. Future events. Yeah, look, we broke the high and then we came down. I mean, what are you going to do? Very difficult. Wow. That's... See where we're rejecting over here. Are we rejecting the same area? Yeah, almost the same area. Didn't even come close to that area. So this was like 16, 17 pips, man. Yeah, the range matters a lot. If my range is less than 20 pips, I'm not going to touch that range. I'm not even going to attempt to do anything in that range. I'm just going to chill. Like, there's nothing to do at this point. I mean, it's just so tough. And the longer you look at, let's say, bad price action, the more your brain plays tricks on you to say that, oh, this is a great trade over here, buddy, take this trade or execute on this trade. Those are the tricks your mind plays on you. This is London Open. Like, look how choppy this price action is. Yeah, what are you going to do? Nothing. The only thing that's helping me at this point is coffee. Just drink coffee and be like, yeah, can't really do anything. Nothing. Absolutely nothing. Let's forward it to the next 30-minute candle. Oh, wow. We're coming up, but we're still rejecting this 30-minute resistance right here. And maybe we can bring this area down. What? Anyway, bring this down over here, right here, and maybe remove this. Yeah. Nothing. I don't know what's going on over here. We're just in this range now at this point. Yeah, we're just ranging. We're not breaking up. We're not breaking down. We're just in a range. Like, look at that. What are you going to do? Big? No, nothing. How big is this range here anyway? 17, 18 pips. Yeah, I can't even do anything in this point. Oh. Okay, so maybe the break came at New York session. Fake out, maybe we can create some sort of a support. Oh, wow. Yeah, this is just bonkers over here. Let's just move on to the next one. Let's just move on to the next one. Yeah, whatever. Screw you, gold. Then give us any trade. All right, here we go. Pre-London session, another one. Another one. We have pre-London session. Let's take a look on the daily. Daily is still moving up. Daily has broken the high of the previous daily candle without making a lower wick, right? What does this tell you? This tells us that the daily candle passed through the Asian session and now in pre-London it's breaking the high above the previous daily candle, which means that the high probability is going to continue pushing up. Perfect. Let's take a look on the 4 hour. 4 hour candles are creating small body candles, which means that the volume is dying to move up on the 4 hour. But also remember, the smaller time frames create the overall higher time frame candles, right? We all know that. Everybody knows that. Looking at the 1 hour time frame, we're creating a support in an uptrend, right? Can you guys see the uptrend on the 1 hour? We're creating a support on the uptrend. Looking at the 30 minute is also creating a support right here. And you know, if we're creating support on the 30-minute, maybe we can have a stop below this 30-minute candle. It's a Friday. Let's risk 3% on a Friday. Stops below the 30-minute candle. Maybe we could anticipate price to continue to push up. Yeah. Maybe, you know. Oh, nice. Look at that. Beautiful. Didn't really expect it to move this much in this 30-minute candle, but I guess we'll take it. Oh, wow, look at that. This just moved incredibly well. This is where you make most of your gains. You risk some profits in the beginning of the week. Price form support. Price form support, took a buy, stops below the previous candle, and that's it. You're done. You close 90%, 90% close. You basically remove your take profit, put stops at break even. That's it. That's all what you're going to do. On a Friday, you just let it just go fly or fall down wherever you think it's going to go. Oh wow, look at that. We continue to push up here into the abyss, basically, in New York session. Wow, retracing. Oh, stopped out. Damn, didn't really expect that to happen. But how much did we fly? We flew about almost like 100 pips. So amazing, right? Made about 14% in this simulation, not counting this last trade, which was like a higher risk. Did about 5%. Would we hesitate to enter that because the candle has bigger wick than the body? Yeah, that's fine, because sometimes, you see these certain things. Because look, we had an uptrend, bearish candle, small body bearish candle, smaller body bearish candle, then you're turning into a bullish candle, and then the bullish candle becomes bigger. And then the bullish candle becomes bigger, you're like, oh, okay, so maybe the volume is maybe shifting a little bit. So, volume here as well, so, yeah. Everybody can do this. It's not me, I can do this. Everybody can do this with enough experience watching the charts. And when this price came down to stop me out, someone can turn around and say, oh, the broker knew where my entry was, and the broker came down and stopped me out. Brokers this and that, they manipulate everything. Things like that happen. Like what can you do? ICT may say, oh, these are order blocks on some complicated word or whatever. I don't know. But anyway, hope this simulation was helpful. The main thing you got to grab from the simulation is using static risk versus dynamic risk. That's what you got to take away from this. What's the difference between using a static risk and what's the difference between using a dynamic risk? Two are very different things. That's the only great takeaway from this simulation, other than entries and something like that. But awesome. So it's going to be in the database in maybe like 3 or 4 hours. And have a great weekend, everyone. We'll see you on maybe Monday. Take care. See ya.